Are you tired of jumping in and out of trades, only to miss the big moves? What if you could ride a strong trend from start to finish, with a strategy that's simple to follow and actually works? In this video, I'm going to show you a powerful trend-following strategy using just two indicators: moving averages and Supertrend. Whether you're trading stocks or indices, this strategy can help you stay in the move and not get shaken out too early. It's effective, beginner-friendly, and best of all, no complex tools are required. By the end of this video, you'll know exactly how to set up your chart with the right indicators on TradingView. Follow a step-by-step strategy for long and short trades. Customize the parameters to fit your trading style. I'll also be sharing a super simple method to identify market trends, whether it's an uptrend, downtrend, or sideways, so stick around. Let's get started. Now, you might be wondering, why use a simple strategy? Well, most successful traders actually rely on simple strategies and basic indicators. Do you know why? If you already know, leave a comment below. I'll share a reason at the end of the video. The three core parts of this strategy. Identify the trend. Whether it's an uptrend or downtrend, this strategy works for both. Spot the retracement. Wait for a pullback in price, entry, and stop loss. Know where to enter, where to exit, and how to set your stop loss. This strategy is not just simple, it's also highly effective and easy to follow. We'll be using only two indicators, Supertrend and Exponential Moving Average, EMA. Let's go ahead and add them to our chart. First, add the Supertrend indicator. Next, add the Exponential Moving Average. We're going to keep the default settings for Supertrend. But for EMA, go to Settings, change the EMA length to 9 to 50, and source is close. And I am changing the color and increasing the thickness of the indicator for better visibility. Taking a long position. The first step for this strategy is to identify the trend. When the Supertrend changes color from red to green, and the price closes above the EMA. So we got the trend. The trend is an uptrend. Next, where is our entry point? For that, follow our second step, retracement. You'll see the price retrace slightly before going up. That's where we enter, during the first retracement after the trend signal. Set your stop loss just below the recent swing low, or about 5 to 10% from the entry price, depending on your risk tolerance. For example, I am taking RCL stock. If you enter at 159, a 5% stop loss would be around 151. You can also scale into your trade by adding smaller quantities if the trend continues in your favor. This setup makes entries and exits very clear without confusion. That's the beauty of simple indicators. This strategy works for all time frame. Now I am using daily time frame, taking a short position when the Supertrend changes from green to red, and the price closes below the EMA. The price retraces back near the EMA and Supertrend. That's your short entry. Wait for the candle to come close to both the EMA and Supertrend, then short the position. Set your stop loss above the candle high and target a 1:1 or 1:2 risk-reward ratio. For example, the candle touches the EMA and is near the Supertrend. Then, the price starts falling, confirming a valid short signal. Now let's look at how we avoid false entries. For example, sometimes the Supertrend gives a signal for a long or short position. However, the second step retracement may violate our entry rules, so we ignore it. In this case, the Supertrend gave a downtrend signal, but the retracement was unclear because the Supertrend was above the price while the EMA was below it. We want both indicators, the Supertrend and the EMA, to be on the same side of the price, either both above or both below. The ideal entry is only when the Supertrend color confirms the trend. Price retraces and comes close to both Supertrend and EMA. Avoid setups that don't follow all three conditions: trend confirmation, retracement near both indicators. Clear entry with proper stop loss and clear with your exits. Want to scale up? Here's a pro tip. Want to visually confirm the trend? Use the cross tool. If the EMA line goes up to cross points, then it's clearly an uptrend. If the EMA line goes down to cross points, then it's a downtrend. A flat or horizontal EMA line indicates a sideways market. This quick trick helps visually confirm the market direction before you place a trade. For example, select the cross tool and place it on the indicator. Here it confirms the uptrend. Here it confirms the sideways. Here it confirms the downtrend. Now coming to our initial question, why use a simple strategy? Most retail traders overcomplicate their charts. Too many indicators, too many signals, and end up confused. But the truth is, some of the best traders in the world follow simple strategies. They avoid complicated setups with too many tools. And there's a good reason for that. The key is consistency, trend detection, and clear rules. And that's exactly what we've covered so far. Before you trade live, make sure to backtest this strategy on different stocks and time frames. That way, you'll gain confidence in how it works and refine your approach. That's it for today. If you found this video helpful, give it a thumbs up, share it with your friends, and subscribe for more strategies. Thank you for watching.